Did you know that in Canada and Australia that over 60% of home buyers use a mortgage broker when they purchase a home? So what do these Aussies know that those of us in the US have not quite figured out yet? I came across this study done by Deloitte and Touch, and it stated that in Australia, that mortgage brokers' customers were more satisfied with their experience when buying a house. That they found that the brokers were more likely to be acting on the client's best interest, and that customers of brokers were more likely to refer someone to the broker that they used. The same customer experiences are happening in the US, and that's why we created this video today. I'm going to be talking about if you should be using a mortgage broker or your local bank when getting a mortgage, and which one is going to save you the most money. Hi everyone, I'm Megan, and if you are new here, I like to talk about real estate, mortgages, and everything you need to know about personal finance and credit when you're trying to purchase a new piece of real estate. 17 years ago, I left a very good accounting career to get into the mortgage and loan business after buying my first house when I was 23 years old, and learned afterwards that I got put into a loan that I didn't want or understand. If buying a home or becoming a real estate investor is important to you, hit that subscribe button to hear more real estate, mortgage, and general finance advice. I'm going to walk you through the 10 biggest differences between your bank and a mortgage broker, as well as give you a few tips for finding a mortgage professional in business that's going to help you get exactly what you need. Now, you're probably thinking that the best way to get a loan to buy a house is to walk into the bank that you deposit your paychecks into, right? Where you know people by their first names, and they will no doubt be able to get you a really great mortgage because you put all this money into those accounts. And it's completely normal to feel comfortable and confident in the bank that you've become familiar with, especially when it comes to something as private and sensitive as getting a mortgage. Plus, it makes sense that if you trust them with your paycheck and other financial info, that they would trust you for a mortgage and get you a great rate. But if you are one of the millions of people who have been turned away or let down by a bank, I want you to know that it's not your fault, and this does not mean that you cannot buy a home. Getting a mortgage is very personal and stressful for a lot of people, even during their second time. So you're going to be giving someone your social security number, your income, your bank statements, and literally everything that you normally do not show a single soul. And then the people you give all this information to, they're going to come back and start questioning you about what the deposit is in your bank account, why your paychecks are this amount and not this amount. And it honestly can feel like an inquisition and a bit like you're doing something wrong. After 16 years of helping home buyers, after my experience, I have found that one of the most important decisions that you can make when you're ready to get a loan is to pick the best financial institution that will be helping you get that loan. And really, there are three main options when it comes time to choose. The first option is your local bank. That I call them depository banks that you walk into, that you have your checking and savings accounts with. They are great for your car loans, home equity lines, personal loans, and you feel really comfortable there. Second type is your, what I call retail lenders. And these retail lenders, they're mortgage retail lenders. They only usually or mainly just do mortgage loans, and they lend their own money. They are one bank and offer more loan options usually than the local bank, the first option, but they do not offer products of other banks, only their own money and the products they choose to have. And those are a lot of the big names that you might see that advertise. And then the third group is your mortgage brokers. And your mortgage broker is an agency with licensed mortgage experts who work on your behalf by going out and finding lenders that have the best loan options and the best rates that you're looking for and need. They do not lend their own money, which in turn allows them to offer more options. So what I'm going to be doing is I am going to pull up here shortly in the video, I'm going to pull up on my screen to walk you through the 10 differences. So to have a little bit of context so you can see the differences between these three different types of lending institutions, I'm going to give you some of the background on the types of products and who funds them, okay? So whenever you're talking about mortgages, all mortgages have names and groupings. So you've got your conforming loans. Conforming loans are loans that follow Fannie Mae and Freddie Mac. If you've heard of them before, you can Google it, look it up, and it'll tell you they're the ones that make all the rules. So your conventional loans are conforming through either Fannie or Freddie. You've got your FHA loans with the Federal Housing Administration. They're also conforming with either Fannie or Freddie. You've got your VA loans with the Veterans Administration with either Fannie or Freddie. And you've got USDA loans with the U.S. Department of Agriculture with either Fannie or Freddie. And that's one of the main groups of loans, which are all called conforming loans. And what I can guarantee you is that these types of loans are almost always going to be sold, no matter where you finance them through. They have to be sold, and that's where Fannie and Freddie come in. Another grouping of loans is what's called portfolio loans. And banks can't sell portfolio loans because it doesn't conform. One of the new types of portfolio loans is what's called non-QM loans. Non-QM loans were loans that came out in the last 2 years to serve self-employed borrowers, real estate investors, and a number of different people, because they created these loans that kind of fell outside of what Fannie and Freddie allowed. But this is where some of you are going to need these loans to be able to qualify, because you might not have qualified at your bank or at those retail mortgage companies. Because anybody who sells to Fannie and Freddie, they all have to conform so that the bank can sell them in blocks. And that's called securitizing. They all follow these same guidelines. So now let's sort through what the 10 big differences are between these 3 bank options that you have and how to figure out what's best for you. So what I have done for you to help understand these 10 differences that I outlined is I made a little chart for your local bank, your retail lender, and then your mortgage broker. And I broke down 10 things that I have found throughout the years when clients go to some of these different places. Of course, I am biased as a mortgage broker, but I've tried the other banking entities and I didn't feel like I was giving my customer the best thing. And when they end up here and we can help them when the other places can't, that's why I wanted to really break down why that happens, because I'm sure as a home buyer, you'd think anywhere could help, or especially the bank that you have your bank accounts with would help you the most. So I'm going to make this large on the screen so you can see it, and we'll walk through what each one means. So if you look here, loan officer qualifications. So a number of years ago, they started saying, okay, if you're going to help consumers with loans, with mortgage loans, you need to be licensed. But that was only for the mortgage brokers. They have to do continuing education and take an exam to be able to help people. Some retail lenders do and some don't. It depends on how they're classified and how their assets are. Local banks do not have to go through and take the exam and pass it. Now, yes, they have their own continuing education, but it's not the same because they're doing a little bit of everything versus your retail lender loan officer, your mortgage broker loan officer. They just do mortgages. Knowledge. Your local bank loan officers are usually very well versed on their own bank products, and not just mortgages, maybe home equity lines, car loans, personal loans. They need to have a wider range of everything and just have a handful of mortgage products. Whereas your retail lenders, which there isn't anything in there because I don't want to speak on behalf of the retail lender and their knowledge, but also they have their own products. A mortgage broker has to learn all the banks that they work with and all of their products. So a brokerage like ours has 25 different lenders. And they each have anywhere from 10 to 25 different products. So we have to have very wide and deep knowledge of the different things that can help our customers. Let's go to the interest rate. So what I did was I said, okay, whenever we go up against local banks or retail lenders, our local banks usually are kind of in the middle, whereas our retail lenders are the highest of the interest rates that I see, and the mortgage brokers are the lowest. So let's say a mortgage broker's at 5%, the local bank might be at 5.1, 5.2, and the retail lender's at 5.3 to 5.5%. Now, this isn't across the board, but that is typically what I see when I am looking at what consumers are getting quoted. The next column is closing costs. The local banks are low to medium. What they don't have is they don't have the lender credits like the mortgage brokers do or the retail lenders. So your retail lenders have the higher interest rates, and a lot of times they have the higher closing costs. Your mortgage brokers are going to have your lower closing costs and your lower rates. That's kind of a win-win. And that's because the reason for this is mortgage brokers can't make more. They're contracted to only make, let's use as an example, 3%. So on a $100,000 loan, they can only make $3,000. Whereas your retail lender and your banks, they're not capped. They can make $4,000 or $5,000. So how this helps you when you work with a mortgage broker is, hey, they're going to say, look, I looked around at all these banks. Here's the rates I found. It doesn't matter which one they pick. They're getting paid the same. And they can even say, hey, but you can even go a slightly higher rate and you get to take that money. It's called a lender credit. And so it helps you have the lowest of closing costs I see typically out of all three. Options is another area. Your local banks are going to be lower on the options. They're just going to have their handful of options that they've chosen to have as a local bank. Your retail lender is kind of in the middle. They usually have more products than your local bank, but they're not going to have all the products that the mortgage broker has because the mortgage broker is working with, like I shared, 20 to 25 retail lenders and local banks. They're signed up with all these different banks and they have all their products. Credit score. So what happens with credit score, and this confuses a lot of consumers, is a bank will tell someone, oh, the minimum credit score for FHA is a 640 here. And a retail lender may say, oh, it's 620, whereas a mortgage broker, it depends on the bank they sign up with. FHA doesn't have a minimum credit score. It's the banks choosing what they're comfortable with. So the mortgage broker is usually going to be able to be more flexible with the credit score. Then you've got mortgage insurance. So mortgage insurance companies, banks use them as a protection. Whenever banks started saying, hey, you can put less than 20% down, they did that by having a mortgage insurance company insure the bank that if somebody was to default, that somebody would be there to help save in the losses. Usually a bank has one option they use a mortgage insurance company. Whereas retail lenders and mortgage brokers, there's actually multiple mortgage insurance companies out there, and that's where you can actually save a lot of money. Interest rate, everyone thinks I need to get the lowest rate, but mortgage insurance, I find, can save you more money than an eighth or a quarter% in an interest rate. Mortgage insurance is one of the most important things that you make sure you're getting options for. And then home types. Local banks, I find, are more picky about the types of properties that they will finance. Sometimes they'll have niches where they'll do some very unique ones. It's just hard finding which bank does what. Same thing with retail lenders. They don't seem to like to do things outside of the box. They don't like to do the manufactured homes or condos that don't conform. Whereas a mortgage broker can really do any type of home that they choose to sign up with a lender that has that product. So finding a really good broker is where you're going to have the most success. Then the bottom two here, which I don't know how to get my name off the bottom, but the debt right here, this is what's called debt to income ratio. And local banks seem to like to have a lower debt to income ratio, which means you don't get qualified for as much. Retail lenders allow you to start going a little bit higher, whereas a mortgage broker works with a lot of banks who don't really cap you on your debt to income ratio, and they follow what the automated systems that all the government entities have out there, that's what they're using. Overlays is the last thing here at the bottom, and the overlay is when banks make decisions, like I was saying, to not do a certain home type or to have a credit score minimum. Those are what are called overlays. And that's where your individual banks, almost every bank has overlays. So that's why when you are looking for a home, you really don't know what you're going to find and fall in love with. And if you walk into your local bank, and let's say that the house that you find has a gas well on the property, and the bank that you do your banking with, they don't like gas wells. Well, guess what? You've been pre-approved with them. You're ready. You're putting an offer in. And all of a sudden, the bank's going to tell you a couple of weeks in, oh, we don't like properties with gas wells. And they might not tell you that till your appraisal comes back. And that's where we get a lot of borrowers who are very frustrated weeks into the process, whereas if they had just started at a mortgage brokerage, we'd be able to place them from the get-go with the bank that will do what they're hoping to do, what they want to do, and it makes for a much less stressful process, and you're getting lower rates and lower fees anyway. I really feel that's where the mortgage broker model is where you're going to have the most success. You're going to pay the least out of pocket, and you're just going to have an overall better experience when you're getting a mortgage, when you work with that specialist who has all those options. Last but not least, I created, and these are like the types of options I was telling you about. If you walk into your local bank and you want to get a conventional loan, they're going to tell you, hey, we do 5% down. Well, you might not know that there are 3% down options out there, which a retail lender would do and a mortgage broker can do. So this just kind of gives you that example. Same thing with FHA. Let's say sometimes a local bank does it. I don't see a ton of local banks doing VA and USDA loans, whereas the retail lender does them, the mortgage broker does them. The mortgage broker is just going to be able to shop around for that rate, the lower fees for you on those products. This is where I see, okay, a doctor loan. So for any of you out there who are physicians or in the medical field, you might have a local bank. Hopefully it's the one you do your banking with. Whereas I don't see a lot of retail lenders doing them, but as a broker, we go sign up with that local bank who has that option so that you can have it. Same thing with portfolio loans. Home equity lines are typically local banks. That's one of their specialties. And I will send people to their local bank if their home equity line option is better for them. I don't see a lot of retail lenders with home equity lines, and brokers will be able to help you with that if they're signed up with a home equity line lender. Same thing with new construction and renovation loans. Now, I would say renovation loans are where brokers start really standing out in the product space. They can do not just your regular renovation loans, but your FHA and your VA renovation loans. And we also do what's called non-QM loans. Non-QM loans are your self-employed borrowers, your, property investors, people who need to not show as much full documentation, but you need to go with specialty products where maybe you put a little bit more down, the rate's a little bit higher. The non-QM loans are great for any of you who are self-employed investors and you just have a very unique income type. So my goal was that you could see in front of you where you're going to have the most flexibility and the most success and usually the lowest costs when you go through that mortgage broker. Your local bank or retail lender absolutely might be able to help have a good option for you, but it's kind of rolling the dice and then you're not really sure where to go. So if you do get qualified with your local bank or retail lender, get a second opinion. This is the biggest purchase. Do not care about your credit. Your credit will not get hurt. And even if it does by a few points, it's worth it to save thousands and to have a much less stressful experience when you're getting your mortgage. As you can see, it has never been harder to get a loan approved, and that is why it is so important to work with a financial company that has more options, more opportunities to say yes to you as a customer than ever before. The last thing I wanted to address in this video is the question, are all mortgage brokers the same? And the answer is no. You can have 3 different brokers, and let's say broker number 1, they may use 3 lenders. Just go out and shop between 3 lenders. Broker number 2 could use 10 lenders. And broker number 3 could be using 30 lenders, non-QM lenders, because, I'm sure you can imagine the more lenders you have as a broker, it's more confusing, there's more information to learn, it's more work. So finding the right broker is key to having success in this as well. I would love to hear from any of you out there. I would love to hear your experiences when you first started applying for a mortgage. Did you go to your local bank? Have you tried a broker? If not, why? We have put a link in the description below just for anybody who would like to have our team explore their options with them. Just click on the link and fill out the information after creating a secure account in the portal. We hope that this video gave you the insight that you're looking for and that you will join us on our next video. If you know somebody who could benefit from this information, if somebody's been denied before and they just need a second set of eyes, please share this video with them. Hit the subscribe button and the bell to get further notifications. Otherwise, continue to check out all the real estate and finance tips and guides on our channel, and we will see you next time.